Quilter Cheviot's Markets Uncut podcast, your weekly insights into the topics and trends that we have been exploring for you here at Quilter Cheviot. Remember, so you don't miss future episodes, be sure to hit the follow button on whichever streaming platform you are listening on, or by following hashtag QC Weekly Comment on LinkedIn. I'm your host, Oswald Oduntan, Investment Manager for the Managed Portfolio Services based out of our London office. And this week, I am pleased to be joined by regular podcast guests Richard Carter and Ben Barringer, Global Head of Technology Research and Investment Strategist. Richard, over to you firstly. Recently, last week, you actually discussed the political developments in France and Japan, and specifically the resignation of Sébastien Lecornu as Prime Minister of France. However, now he's been reappointed by Emmanuel Macron to address the nation's financial challenges. What factors, if any, have changed in this situation in the last week?
I'm not sure a lot has changed much, to be quite honest. He had some discussions with the opposition parties, and surprise, surprise, was reappointed as Prime Minister. So whether anything much has changed in the last week or so, I'm somewhat sceptical. I mean, the idea is the government, the new government, gets its act together, tries and puts a 2026 budget in place before year end, and kind of moves forward from the political crisis. But they're very reliant on the opposition for them to stay in power, and there's no guarantee that they won't face another sort of vote of no confidence in the coming weeks and months. So I think basically the most likely thing is the political kind of crisis continues, and there may be fresh elections at some point, although it's fair to say French bond markets and things like that have settled down a little bit over the last few days.
Thanks. And also on keeping count of things, we are approaching the second week of the US government shutdown, or the end of it actually, and there appears to be no indication of progress, according to recent reports anyway, with both Republicans and Democrats remaining at an impasse. So despite this, markets have managed to remain relatively stable. However, tariff concerns have now resurfaced, with China recently announcing tighter restrictions to exporting rare earth minerals, in which they established a near monopoly, refining about 90% of global capacity. But on Sunday, Trump tried to ease concerns after initial threats of an additional 100% tariff on Chinese goods. What moves are we now seeing in the market?
Yeah, it was classic Trump, wasn't it? A tweet criticising China's plan for export controls on rare earths sent the markets into a bit of a tailspin on last Friday, and then a different tweet over the weekend seems to have calmed things down. I mean, I think basically there is scope for negotiations, because his deadline wasn't until the beginning of November, which is a long time away in sort of Trump terms. So I think there's still a chance that he'll meet President Xi later on over the next couple of weeks, and this will all calm down. But clearly the fractious relationship between US and China on the trade front is something that markets are paying pretty close attention to.
Thanks. I think the term is taco now. Trump always chickens out. So we'll see what happens there in terms of negotiations. It's interesting that those rare earth minerals are critical components for fighter jets. They're also used in smartphones, electric vehicles, and somewhat in the semiconductor supply chain. So that brings me over to Ben. Thank you for joining us. It seems we're frequently hearing news about new agreements with OpenAI from companies such as NVIDIA, Oracle, Broadcom, and most recently AMD. And the value of all these deals have reached, according to some reports, around $1 trillion US. And since the announcement, AMD's stock has risen more than 30% over the past week. Could you provide some insight to help us better understand the implication of these agreements?
Yeah, morning, Oz. I love the segue. Very, very well done. So it's been slightly confusing if you're sort of not doing it every day like myself. But there's been lots of OpenAI announcements, as you say. Let me try and provide some context. So Microsoft and OpenAI have been working together very closely since OpenAI was, first started. OpenAI has now got growing pains and wants to expand outside of the sort of Microsoft envelope. Also, Microsoft is reasonably capacity constrained. And so what OpenAI is doing is looking outside of Microsoft for other ways of doing its model training, and in some cases, its model inference. And so the deals that you've been seeing can you classify into two groups, really. The first one is extra data center capacity outside of Microsoft. And those the two principal providers of that have been Oracle and a company called CoreWeave. And Oracle looks like it's doing about 6 gigawatts, something like that. And CoreWeave looks like it's doing another gigawatt or two. That led Oracle to put into its backlog. They call it RPO, but it's basically like, backlog or bookings for the future. That jumped from 150 billion to 450 billion when Oracle announced their results. Now, we don't know what margin that Oracle business is going to be done at, that cloud business is going to be done at, but we're going to find out this week because they've got a capital markets day. So that, if you will, that's the data center build. And then within the data center, obviously you need chips for all of this training of the models. And so they've been doing deals with NVIDIA, as you say, that's for 10 gigawatts of capacity, and with AMD for 6 gigawatts of capacity that's going to be rolled out. Also rolled into that is the fact that NVIDIA is investing in OpenAI because they've just done a funding round. And so it's going to invest about 100 billion from a 500 billion valuation. And even more interestingly, OpenAI is actually investing in AMD, so the other way around, using a thing called warrants, which are like options. And those warrants will pay out when AMD's share price gets to certain milestones. So actually the highest one of those is $600 and the stock price is about 220 today. So that's quite, interesting. So lots of deals happening. But people point to the fact that there's lots of sort of investing in each other, and that's a little incestuous, and there's what's referred to as vendor financing, and that is definitely a red flag. Now, we are thinking about our positioning in tech, and there are some red flags: vendor financing, high capex, particularly high capex to sales, high market concentration, but also on the positive side, valuations remain reasonably justifiable. Earnings momentum remains good. Tech has superior growth to the rest of the market. So, and also demand is broadening out in terms of AI as well, both from consumers, enterprises, and governments. So, look, overall, we remain, diligent as always, and in line in terms of our tech weighting, because we still think there's some upside, but there's also some growing risks as well. Hopefully, that's helped. It took a little bit more time than you probably wanted, Oz, but helpful to provide some context.
No, that's helpful. And just on the capacity constraints, I think the big question is, where will OpenAI and all the other players source the energy needed for such massive computing power?
Yeah, look, in terms of sort of the money for it, some of it's coming in terms of their equity raises that they've just done. They've just, as I say, done a funding round that values them at $500 billion. There's also some money that will come out of those warrants I talked about. And then some of it is going to be done by its partners, right? And classically, Microsoft's been paying for all its data center rollouts out of free cash flow. Again, a slight worrying sign is that Oracle is actually going to start doing some debt raises to pay for some of this. And so that's, again, ringing some sort of, warning bells in my ears. And again, one of the reasons we stay more in line in terms of our tech weighting. In terms of the power, you're absolutely right. If you add up all of the capex that's happening in hyperscale, it's going to mean about 40 gigawatts. So a typical massive data center now are getting it up to about a gigawatt. It's going to be about 40 gigawatts of capacity. That compares to 1,200 gigawatts of total capacity in the US. So some of it can be done by recommissioning power stations. You've seen that in 3 Mile Island. The nuclear power station in 3 Mile Island was recommissioned. Some can be done from small modular reactors. Some can actually be done from converting Bitcoin mining data centers to traditional or AI data centers. Some can be done from solar, and some can be done from sort of efficient, more energy efficient gas turbines. But there's still quite a gap. And if you talk to Jarek, our industrials analyst, he covers lots of the companies that do the components and the power transformers and things like that. Those will continue to remain in short supply, and so power is going to be a constraint for all of these data builds. There's some capacity that's going to come online, but we're still relatively capacity constrained.
Thanks, Ben. And we're coming up to another round of global earnings reports. I guess we're looking for details in terms of expansion, but what else will you be watching out for in the tech sector?
Yeah, look, the first two are this week. So we have got ASML on Wednesday morning, and we've got TSMC, the big Taiwan semiconductor manufacturing company, on Thursday. We actually get the monthly data from TSMC, and that looks to be tracking that sales are still growing above 30%. So that's pretty encouraging. We'll obviously be watching their capex, how much they're spending in terms of the rollout of their manufacturing facilities, their fabs. ASML is a direct beneficiary of those rollouts because they make the machines that make the semiconductors. And both shares have been doing pretty well. ASML has had quite a big recovery, basically because in 2026 it sees very little growth, but investors, are always looking forward, and they're looking forward to 2027 now, where you are actually going to see a little bit of quite a pickup in ASML's growth, and that's for a number of reasons. First of all, Intel, Samsung, and TSMC, they're three of their biggest customers, seem to be in better health than they were. Certainly, Intel and Samsung were in the hospital for a little while, and they seem to be recovering. You've also got a new customer in Japan for ASML called Rapidus that's going to be producing leading edge chips in Japan. The memory industry is also pretty strong at the moment, helped by the data center demand. And then the Chinese semiconductor market is also, ordering more machines than we thought. So look, it's been a very strong month for ASML, but people thinking about 2027 should take a look at ASML, because I think that the market conditions are improving. Away from those two, which are this week, look, the big focus for me, and in terms of getting the stocks right, the big three macros for me are: one, IT spending. What's happening to IT spending? Looks like it's sort of around the 3.8% mark, but obviously within that, some areas go faster, some go slower. So IT spending. Then second of all, digital advertising spending. Again, we're reasonably buoyant market for digital advertising at the moment. And then finally, what those big hyperscalers, Amazon, Microsoft, Google, are spending in terms of their capex. What's the direction of travel for that? Because in 2024, that number was over 50%. This year, it's probably going to be 40% growth, something like that. We think next year into 2026, it's probably around 15 to 20%, something like that. So that's what we're sort of anchoring our expectations on in terms of growth for the AI complex, around 15 to 20%. I'll leave it there, Oz. Hopefully that was useful.
Yes, thank you so much, Ben. I imagine you'll be very busy in the coming weeks. Thank you both for your insights today, and to all of you for listening. Did you enjoy our discussions on the podcast? We'd love to hear from our listeners, so please review the show now wherever you're listening, and share it on your socials, and tag us at Quilter Cheviot. To make sure you don't miss a future episode, tap the subscribe button. And we'll be back next week. In the meantime, head over to our website at www.quiltercheviot.com, where you can read the accompanying market overview, as well as subscribe to our weekly comment newsletter. You can also stay up to date with our thoughts on market news, industry insights, and our upcoming events and webinars on our website or our social media pages. Finally, do you have questions you'd like to ask one of our experts for the next podcast? Simply ask them via the weekly comments page on our website. We'd love to hear your questions. And that's it for today. So thank you again, Richard and Ben, for your time, and to all of you for listening. See you next time.